Hello, welcome to the part 2 of our lesson on accounting for non-trading organizations. I told you earlier that we are going to take a question and solve that together in this video. So I don't want to waste much time. That is exactly what we are going to do. But before that, I will still urge you to subscribe to the channel if you are yet to subscribe. Subscribe to this YouTube channel and then ring the notification bell as well so that you always get notified when we upload new videos. More and exciting videos are ahead of us that we are going to learn from. Okay, so let us take the question together. You are given the following information relating to Jamaica Keep Fit Club. So we have the bank account for the year 2018. The bank account in this case is the receipt and payment account. We have subscriptions for 2018 on the debit side, and then subscriptions for 2019 also on the debit. That is 105. Then we have bar takings. That is sales. So into brackets sales. Bar sales to be 110,920. We have receipts from fanfare. And then on the credit side, we have bar supplies, which is purchases. And then we have expenses on fanfare. We have bar wages. We have general expenses. And then we have repairs and decoration to premises also as an expense on the credit side. And then there was a new furniture bought on 30th June 2018 for 12,500. So that is it with the bank account. Now what you should take note is that they have not balanced off this bank account. And therefore we are going to do that in the question. And then there is bar trading activity as well. So we continue with the question. We are told all bar takings and other receipts were banked intact. The building belonging to the club was valued on 1st January 2008 at 75,000. I repeat. The building belonging to the club was valued on 1st January 2018 at 75,000 Ghana cedis. The balance at the bank on 1st January was 3,810 Ghana cedis. Okay, so we are giving the opening bank balance, which they didn't give us in the bank account. The value of furniture on 1st January was 8,000 Ghana cedis. Then we are told in additional information, Ivan, that subscriptions in advance amounting to 130 were received in 2007. All right, and then depreciation on old and new furniture is to be provided at 10% per annum. The following details are also available. So we have the list of balances, just 3 of them, opening and closing. We have bar stock, opening stock to be 4,305, and then closing stock to be 4,640. We have creditors to bar supplies. That is creditors to the purchases that we made for the bar. 6,205 for the opening, 6,330 for the closing. And then finally we have subscription owings. Opening balance is 180 Ghana cedis and closing balance is 90 Ghana cedis. Then you are required to prepare A, the income and expenditure account for the year ended 31st December 2018, and then B, the statement of financial position as at that date. All right, so this is the question that we are going to analyze together. Okay, so we are analyzing this question together. You see that from the beginning, we are told that there is a bank account, which is the receipt and payment account. On the debit side, we have 9,500 Ghana cedis, which is subscription for 2018. And we are working, remember that we are working in 2018. We are supposed to prepare the accounts for 2018 financial year. And so the subscription for 2018 is what is actually received that relates to the year 2018. Now we also have subscription for 2019, meaning that we have received it this year, but it is in advance for next year. So it's going to end the year as a closing prepayment. They have paid in advance, so take note. That's 105 Ghana cedis for subscription for 209 is a closing prepayment. Then we have bar takings. The bar takings means bar sales. So it means that this Jamaica Keep Fit Club has gotten enough money to set up a bar. And the bar, the sales that they made from their bar is what they have put in their bank account. Then they have receipts from fanfare. Receipts from fanfare, it means that they organized the fanfare and there were some receipts at the entrance. That, let's say you buy tickets before you enter. So that is the receipt they took from the fanfare. And then they have on the credit side bar supplies. The bar supplies is like the amount they have paid to the creditors of the bar, people who supply them the drinks and other things, and they pay them. So it's like payment to creditors of bar. That is the meaning of the bar supplies on the credit side. And then we have expenses on fanfare. Expenses on fanfare means that they have that was the amount they spent on the fanfare, and they have bar wages. So maybe there is a bar attendant and they pay the attendant some wages. That is on the credit side of their bank account as well. And then general expenses is there. Then they have repairs and decoration to their premises. That is also an expense. Okay. And then finally we have new furniture bought. And the furniture was bought on 30th June 2018. Okay, so we are going to add that if there is any existing furniture for the purposes of depreciation, we'll do that. Now, normally, the receipts and payments account, or the bank account in this case, will show on the debit side revenues and on the credit side expenditures, except those items are maybe of capital nature that we cannot take to the income and expenditure account. Then we are also told that the building belonging to the club, 1st January, so that is the opening balance of the building. We have the balance at the bank at the beginning. Now, take note that the bank account that we just looked at does not have any opening or closing balance. That is why it is important that we will re-prepare it again. We will prepare it again to ascertain the opening and closing balances, but we have been given the opening, so we'll ascertain the closing balance by preparing it again. And then there was another opening balance for furniture. And remember, we bought a new furniture. So when we are calculating depreciation on the furniture, let us factor that as well. And then we have subscriptions in advance amounting to 130 were received in 2017. Now, we are working in 2018. So if in 2017 they paid subscription in advance, then that is the opening balance of a prepayment for the subscription. So let's take note. Subscription prepayment at the beginning of the year is 130 Ghana cedis because it is coming from 2017 to 2018. And then finally we have depreciation on old and new furniture. Okay, so we've mentioned that already, 10%. But we are going to apply the 1 month ownership basis. Take note. And then we have some closing and opening balances for the bar stock and then the creditors to bar supplies. All that will relate to the bar trading account. And then we have subscription owing at the beginning and at the end. We are going to use that to prepare our subscription account. Take note that we will always have to do the bar trading account first. Get a profit for that before we come to the income and expenditure. So we are going to prepare our subscription account, and then we'll prepare the statement of affairs, and then we'll prepare the bank account again. We'll calculate our depreciation, and then we'll work on the bar. But take note, for the bar sales, it has been given to us straightforward as bar takings. There was no opening and closing balance in respect of debtors to bar takings, and therefore we can take that cash sales straight away as our sales for the bar. But when it comes to purchases, we may need to prepare a creditors control account in order to ascertain the purchases for the bar, because we have opening balance for creditors and closing balance for creditors to the bar supplies. And then we also have payment to bar suppliers. And that means that it is impossible to get the figure straightforward unless you are able to prepare a control account, and then the difference becomes the purchases. So that is going to add up. So this question that I have brought to you now entails a lot. But I intentionally did that so that when you have gone through this and you understand, subsequent questions may not be this loaded. Or even if it's this loaded, you will be able to solve it. That is what I intend to do. So let us begin the workings. The first one I want us to do is to prepare the subscription account. So working 1, subscription account. Okay, so from the question, we have subscription owing, and then we have subscription prepaid for both closing and opening balances. And therefore, we are going to work according to that. And so we can see from the question that there was an owings. Balance brought forward for subscription owings was 180, and then I leave a space like I told you, and then the closing balance carried down for subscription owings was 90 cedis. That is according to the question. And then we are also told that there was subscription prepayment at the beginning. From the additional information, we are told that the subscription in advance amounting to 130 were received in 2017. And so that will start the year as prepaid brought forward. So balance brought forward for prepayment will be 130. And then in the bank statement, bank account, there was a balance carried down for prepayment. Now let me go back and visit for you. We are told in the bank account that subscriptions for 2019, 105. So that is your closing prepayment, 105. And then what you have to do next is to go to your bank account or the receipt and payment account. In this case, it's a bank account. And then we are going to look for the subscriptions in there and bring the corresponding entry. Subscription is on the debit side in the bank account, so it will appear on the credit side of the subscriptions account. Now when we go there, there are two figures, one for 2018 and one for 2019. Which one are we bringing? My answer is that we combine both and bring, because both of them will still have corresponding entries. So that is 9,500 plus 105, giving us 9,605 as our figure for subscription. So all the time, when it comes to bringing the corresponding entry, please combine, the narration should be bank. Combine what you have in your receipt and payment or bank account, and then you bring it. You can decide as well to put them individually, 9,005, 105. But the most important thing is that you are completing the double entry for both. So now that we are done with this, we can just balance off the subscription account, and the difference goes to income and expenditure accounts. So the total will be 9,825 for both sides. 9,825 Ghana cedis, and that gives us a difference of 9,540 for the income and expenditure. So this is the figure that we are going to take to the income and expenditure account as revenue in respect of subscription. I'm sure we are okay on that. Okay, then the next thing that we have to prepare, I told you that we have to prepare the bank account again to be able to ascertain the closing bank balance for the statement of financial position. And so working two, I'm going to prepare bank account. Now, with a bank account, all that I'm going to do is that I'm going to just recopy all that I have in the question, as simple as that. But I'll factor the opening balance that they didn't put there, and then I'll just balance it off. So there is nothing new I am going to add. We are just going to copy what they have given us already so that we can balance it. That is the meaning of preparing the bank account. And so with the bank account, we were told in the additional information that it has an opening balance on 1st January, 3,810. And so there will be a balance brought forward of 3,810. So once you put in the balance brought forward, the only thing that is left for you to do is to list back all that they have given you again, as simple as ABC. So it's not anything difficult, just that they want to increase the load of your work. That is all. So let us begin to list them again. So we have subscription for 2019 to be 9,500. We have subscription for 2018 to be 105. And then we have receipts from fanfare. And the receipts from fanfare figure is 3,970. Okay, I skipped one. That is the bar sales or the bar takings. So the bar takings is also known as bar sales. And the figure for bar sales is given to us as 110,920. So 110920. So I am done with listing for the debit side. So I'll come to the credit side and repeat all that they have given us. And then we just close it off. It's not any headache for you to cry about. So that is on the credit side, we have bar suppliers, 85,730. So we have bar suppliers, 85,730. And then we have expenses on fanfare to be 3,610. So fanfare expense. The figure is 3,610. And then also we have bar wages. So bar wages. The wages for bar is 12,340. After bar wages, we have general expenses. So we are just listing general expenses. The value of general expenses is 9,810. And then after that, we have repairs and decoration to premises. So repairs and decoration. And that is at a value of 7,000. So we list that. And then finally, there was new furniture. So we bought a new furniture at 12,500. So ladies and gentlemen, what I have done is that basically I have just listed what we had already in the question. So we are now going to balance off this bank account, and then we'll look at the closing balance. And so we'll just leave a line there, and then we'll find the total. Now you realize that when you add that up, the credit side has more value than the debit side. So the credit side is 130,990. And the credit side is the same, 130,990. So it means that our difference is going to appear on the debit side. That is the balance carried down. And the value is 2,685, meaning that our balance brought forward is 2,685. So that is a balance brought forward, meaning that we are getting, balance brought down, meaning that we are getting a credit balance for the bank, which is a bank overdraft. So when we are preparing the statement of financial position, we are going to use this figure as a bank overdraft. So that is all the bank account is about, or the receipt and payment account. Whichever they give you that you are preparing, most of the time you just have to repeat the items given, and then you just find your balance. So we are done with the second workings. Okay, so let us move on to prepare the statement of affairs, which will give us accumulated fund. So statement of affairs. The statement of affairs as at 1st January 2018. That is, we are using the opening balances to prepare our statement of affairs. Okay, so let's begin with our assets. Now, we have two non-current assets at the beginning of the year. If you look at the additional information, we have we are told that the building belonging to the club was valued on 1st January 2018. So that is the opening balance for the building, 75,000. And then the third information says the value of furniture on 1st January, 8,000. So we have building to be 75,000. And then we have furniture to be 8,000. These are only the opening balances. These are only the opening balances. Okay, and then we can continue with the current assets. Now, with the current assets, in the order of liquidity, we usually go by stock before receivables in that order, and then cash and bank. Now, over here, there was a stock that is for the bar, and it is an asset for the club or the Kifit club. So we will put our bar stock because it's an asset, and we are picking only the opening balance for bar stock. The opening balance for bar stock is 4,305. And then we are also going to pick I think there were no receivables. No, there were. Subscriptions owings from the beginning is a receivable. And so we are going to bring subscription owing as an asset. And the value is 180. And then there was an opening cash balance. So at the bank. So bank. Let me call it bank. So the bank balance is also 3,810. I think these are the only assets that we had for both the non-current and the current assets. And so when we add up our assets at the beginning, what are we going to get? We are going to get 91,295. So that is for the assets. And then we take out our liabilities. So when we take out our liabilities, what are the liabilities that we have? We have the creditors to buy supplies, which is also a liability at the beginning. 6,205. It's a liability. And then also subscription prepaid will also come as a liability. So creditors to buy supplies, which is 6,205. And then we have the subscription prepaid. We all know that income prepaid is a liability. So 130. So when we add, we have 6,335 that we are taking out from the assets. And the difference gives us our accumulated fund. So this time we are not calling it capital. We are calling it accumulated fund. And the value is 84,960. So that is our accumulated fund from the question that we have just solved. So now that we are done with the statement of affairs, we have to now focus on the bar trading. We prepare bar trading accounts for the bar to ascertain the profit. But remember that we have the bar takings, which is the sales. But I told you we don't have purchases. So you have to prepare creditors control account for the bar. So if you have a question where there is bar, it makes the work a little complex. But if there was no bar, there may be no need, or there will be no need for the control account. So we are going to prepare creditors control account before we prepare the bar trading account. So working for creditors control account. So we know how to prepare the control account. Opening creditors balance comes to the credit side. Closing balance goes to the debit side. And if there is any cash paid to creditors, it will come to the debit. And the difference will appear on the credit as purchases. As simple as ABC. And so from the question, the opening balance for creditors, which is the creditors to buy supplies, is 6,205. And then the closing balance for the same is 6,330. All right. And then we go to the bank account or the receipt and payment. Now the bank account, bar supplies is 85,730. And that appears on the credit of the bank account. So it will move to the debit. 85,730. And it comes in the name of bank. And that is all. So we can just balance off this account as simple as ABC. And then we'll find the total. The total is 92,060. So that will be for both sides. And therefore the difference will come as purchases. This is a control account. So the difference comes as credit purchases. And the amount is 85,855. That is our credit purchases for the period. But because there is no cash purchases, straight away to go as our total purchases for the bar. So that is how your creditors control account is going to be like. And then we can prepare the bar trading account now. So income statement for the bar or your bar trading, whichever way you want to call it. So bar trading account for the year ended. December 2018. So we'll begin with our sales from bar, what they called bar takings in the question. So that is your bar sales. So that is the sales for the bar. And the value for the bar sales is 110,920. We know this format already. So after sales, we less the cost of sales. We don't have any returns or any adjustment on the sales. And so we take out our cost of sales. So we begin with the opening stock. And remember, the opening stock, we have that in the question. That is the bar stock. We have opening stock for the bar, and then we have the closing stock for the bar. So going through the question, bar stock, the opening is 4,305. So 4,305. And then we add purchases for the bar. The purchases is what we just had from working for, which is 85,855. There is no adjustment on that as well. And so when we add purchases, we have 90,160. That is our cost of goods available for sale, COGAS. And then we take out closing stock for the bar. So the bar stock, the closing balance for bar stock is 4,640. So 4,640. And when we take that out, we are going to have 85,520. Yes, 85,520. Now that is the cost of sales. So we take that out to get gross profit anyway. But remember, there was bar wages. This is not salaries. Wages is a direct expense. And so it has to be added to the cost of sales. So we'll just add it straight away instead of taking it as an expense. Bar wages, and from the question, the bar wages figure is 12,340. So when we add the bar wages to this, then we have our cost of sales, which is 97,860. And then we'll take it out to get our profits on bar. And in this case, the bar profit will be 13,060. So that is the bar profit. We are going to take this bar profit to the income and expenditure account as income for the year. Okay. So at this point, we are almost done with the workings. But before we move on to prepare the income and expenditure account, we have to also look at the depreciation aspect, which may be the last part. So we are going to look at depreciation of the assets that we are supposed to depreciate. Now, from the question, we are told that depreciation of old and new furniture is to be provided at 10% per annum. Okay, now the old furniture is the furniture that was there from the beginning of the year. The new furniture was bought within the year and it can be seen from the bank account on 30th June 2018. And so what we are going to do is that we are going to use the 1 month ownership basis and calculate depreciation for each of them. And then we combine to find the total depreciation on the furniture. Okay, so our next workings is on depreciation. So working 6, depreciation of furniture. So for the old furniture, that was what we had at the beginning. It was at a cost of 8,000 Ghana cedis. So we applied the depreciation of rate of 10%, and that gives us 800 Ghana cedis. And then for the new furniture, it was at a cost of 12,500. We applied the rate of 10%. But remember that it was bought on the 30th of June. And that means that it was used from 1st July to the end of the year. That will make it a 6 months use. And so we have to apply the ratio, 6/12. And that is going to give us a total depreciation of 625 for the new furniture. And so when we add that up, we have 1,425 Ghana cedis as total depreciation for the entire furniture that we are going to use. And then consider the asset prices. Let us look at it in the form of an account. So let's assume this is the furniture account. Even though the depreciation was a 1 month ownership basis, when it comes to the cost, we have an opening balance of 8,000 Ghana cedis. And then there was a new furniture that was bought, which is 12,500. And so when we add that up, we are going to get a total figure of 20,500 for the furniture. And that will be the balance carried down, 20,500, which is going to be taken to the statement of financial position. All right, so we are done with the workings. So what we are going to do next is that we are going to prepare the income and expenditure account, and then we are going to prepare the statement of financial position, which we have actually been required to prepare. Okay. Okay, so now we can proceed to prepare the income and expenditure account. So in the books of Jamaica Keep Fit Club, I'll prepare my income and expenditure account. For the year ended 31st December 2018. So I'll show my two currency signs, and then I'll begin with the income. So we are going to list our income. Afterwards, we'll list the expenditure, and then we'll subtract the expenditure from the income to get a surplus or deficit. All right. So from the question, I told you that one of the easiest sources to get your income items is from the debit side of the bank account or the receipt and payment account. And then when you check the credit side also, you are going to get the expenditure. Even though it's not all the things in there that are income and expenditure, but at least you should have a knowledge of the income and expenditure classifications. But it's a good place to look for them. So in this question, the income that we have are subscription and then the profit on bar. And then there was a receipt from fanfare as well. If you move to the debits of the bank account, we have subscription. But we have already worked for subscription accounts. So we are going to bring the figure for subscription as income. Okay, so subscription from working one. The figure that we had for the subscription account to the income statement is 9,540. And then we are going to bring the profit on bar. That is the bar profit. The bar profit also, we had 13,060. That was the profit on bar. So if you look at the debits of the cash book, there we saw bar takings, which is the bar sales. But that is not what we are bringing. We have worked for that. So we bring the final figure. And then there was a receipt from fanfare. Nothing was said about that. So we didn't do any workings on receipt on fanfare. So we are going to bring that as another income. So receipt from fanfare. And the figure for receipt from fanfare is 3,970. These are the only three income items that we have from the question. And so we have a total income of 26,570. So that is the total income. And then we can take out the expenditure. So less expenditure. So now what we do is just to list our expenditure and then find the total for the expenditure and subtract from the income in order to ascertain a surplus or a deficit, like I told you. So the income and expenditure account is not anything difficult. It's about listing your income, taking out your expenditure to see if you had a surplus or a deficit for the year. So let us look at the expenditure. Now, going to the credit side of the receipt and payment account or the bank account, we have some expenses over there. We have expenses on fanfare, we have general expenses, we have repairs and decoration. So these are the expenses that we have. Now take note that the bar expenses will not come here again. The bar expenses is not coming again because we've already used that. The bar wages is also not coming. We've already used that. So we are going to pick the other expenses that we have. And so we have expenses on fanfare. And the value for expenses on fanfare is 3,610. And then also we have general expenses. And the value for general expenses is 9,810. And then also we have repairs and decoration. So repairs and decoration to premises. And the value of that expenditure is 7,000 Ghana cedis. So these are the three expenditure that we can find from the bank account. And then after that, remember there was depreciation. We calculated depreciation for the furniture. So depreciation for furniture. And it was at a value of 1,425, if you can remember from our working 6. So that is it, 1,425. So we are going to add up all the expenditure. And when we add the expenditure, we are going to subtract that total from the income. And then we are going to get our surplus or deficit. And so when we add up, the total expenditure is 21,845 Ghana cedis. And then we take that out to get a surplus. The surplus is 4,725. So we call that a surplus. Surplus of income over expenditure. So this is as simple as ABC. So the income and expenditure account is not difficult to prepare. But what goes into the workings is what you have to master. So from here, you have to sit down and learn well how to prepare the subscription account, the bar trading account if there is any, and then how to work for depreciation and any other working that is involved. But the income and expenditure account is as simple as you see it. All right, so now that we are done with the income and expenditure account, we prepare the statement of financial position, which is the last requirement. So statement of financial position. As at 31st December 2018. So I will show my three currency signs. And then I will start with the non-current assets. So I provide for cost, depreciation, and net book value. Okay, so for the non-current assets, we had building and furniture. Those are the only two that we have in the question. So building from the beginning of the year came at a cost of 75,000, but there was no depreciation provision for that. So the net book value will still be the same as 75,000 Ghana cedis. And then there was furniture. The cost at the end should be 20,500. That is when you add the 8,000. What we did, we added the 8,000 to 12,500. And then we had depreciation on furniture for 1,425. So when you subtract 1,425 from the cost, you are getting a net book value of 19,075. That is going to be the net book value for the furniture. Okay, so we can now sum up the assets and then we can proceed. So for the cost, we have 95,500. For depreciation is 1,425. And for the net book value, is going to be 94,075. So this is what we are going to use for the rest of the question. Then after the non-current assets, we look at the current assets. So current assets. What were the current assets in the question? In this question, there were not much current assets, but we know from the order of liquidity that we look for any inventory or stock, and then receivables, then cash and bank. All right, so from this question, the only non-current asset we have were the bar stock at the end, and then there was subscription owing. All right, so the stock or inventories, the bar stock will come here. I'm sure you may be asking a question as to why we didn't bring anything about the bar here. Remember that over here we only needed the profit for the bar, but the bar stock is still an asset to the club or the association, and therefore we are going to bring the bar stock. And remember that in the statement of financial position we are going to bring only the closing balances, and so the closing stock for the bar is what we are bringing, and that is 4,640. And then there were no trade receivables, but then we have subscriptions owing, which is also a receivable. So subscription owing is an asset. We use the opening balance for the opening statement of affairs in order to get the accumulated fund. So in the statement of financial position, we are going to use the closing balance for subscriptions owing, and that is going to give us 90 cedis. So when we add the two, we are going to have 4,730. 4,730. I'm going by the total asset way. So I'm going to find your total asset, and then we'll look at the equity and liabilities as well. So that is going to give us total assets of, when we add the non-current asset to the current asset, we are going to have a total asset of 98,805, if I'm right. Yes. So we are going to have 98,805 for the total assets. And then we'll come to the equity and liabilities portion. So we'll say financed by. So these assets were financed by, we are looking at the equity portion. Remember that in the case of a trading business, it will be capital minus drawings plus profit. It has not changed in the club setting. Only that I told you that instead of capital, they call it accumulated fund. And instead of profit, they call it surplus. And there were no drawings in this question. And so we are going to bring the accumulated fund that we had from preparing the opening statement of affairs. And from the statement of affairs, the accumulated fund that we had was 84,960. That is the accumulated fund. And then we add the surplus. The surplus from the income and expenditure account, which is 4,725. And so when we add the surplus to the accumulated fund, we are going to have 89,685. 89,685. And that is going to be the equity side for the club. And then we'll look at the liabilities. Now, in this question, there was no non-current liability, or there was no long-term liability. So we are only going to list the current liabilities for the club. And remember that there were subscriptions paid in advance. So that is going to come as a liability. And also, there were some creditors for the bar. That is also going to come as a liability. Now, someone is asking, or maybe someone is asking, why we did not bring the bank balance as an asset. Now, the bank balance was an overdraft. The balance carried out was at the debit, and the balance brought down came on the credit. And so it's going to appear rather as a current liability. So these are the three liabilities: the creditors to bar supplies, the bank overdraft, and then the subscription paid in advance. And so let us list them together. So we have the creditors to bar. The closing balances is what we are bringing. So the creditors to bar, the closing balance is 6,330. And then we have the bank overdraft. When we prepare the bank account, the overdraft that we had at the end is 2,685, if you remember. So 2,685 comes as a bank overdraft. And then finally, we are going to bring the subscription prepaid, or subscription paid in advance. So subscriptions prepaid. And the closing balance is 105. So Ghana cedis. So when we add these three, we are going to add and put the total here, and then add it up to the equity portion. And so the total for the liabilities is 9,120. 9,120. And so our total equity and liabilities is going to be 98,805. 98,805 Ghana cedis. 98,805 Ghana cedis. Meaning that the two are equal, and so it has balanced. And so, ladies and gentlemen, this is how we prepare the income and expenditure account. As for the statement of financial position, you know how to prepare that already. The only difference is that we brought a change. Instead of capital, there is an accumulated fund, and instead of profit, there is a surplus. But nothing new has happened. The only thing you have to master now is to learn how to prepare the subscription account. If there is any bar trading account, how to go about it. Remember that the bar trading account itself may give you an additional task. If they don't give you the sales and the purchases for the bar, you may have to proceed to prepare a control account for both debtors and creditors, if any, so that you'll be able to ascertain the sales and purchases before you now prepare the bar trading account as a working, before you bring the profit to the income and expenditure account. And so when there is a question which involves a bar, it makes the question a little bulky, but the principle is still the same. You just have to take your time, go through the question that we've solved again yourself, try understanding. If you don't have the understanding after, you can try other questions as well to enhance your understanding, or you can still send us a message to let us know your challenges. We will look at how best to help you. This is the concept of the accounting for non-profit making organizations. We may solve a question again on this, but for now, I want to end it here and then focus on other topics. When I realize that the feedback that is coming requires that I solve a different question, I may solve a question again to enhance your understanding. Thank you. Remember to subscribe to the channel. Once again, I remind you, subscribe to the YouTube channel, share this video, let others also have a benefit, and then together we shall grow together. Until we meet again next time, it is bye for now.